and welcome to McQuilling TV. I'm Matt Renov, Senior Energy and Shipping Analyst at McQuilling Services, and this is our October 2014 Tanker Monthly Update. Amid falling oil prices, China, the world's second largest consumer of crude oil, imported 18% more crude in October from the year before. Supporting this, our proprietary data showed that VLCC fixtures to China were up 5% year-on-year, while Suezmax fixtures to China were up roughly 36%. On a month-to-month basis, global VLCC fixture activity was up nearly 41%, and spot rates climbed in tandem. AG voyages averaged world-scale 48, or about $29,000 per day on a TCE basis. AG West gained 3 points month-on-month and traded at an average of world-scale 24. A rebalance of trade flows continues to support the West Africa to Far East trade route, which also saw an uptick in volume from September. Rates rose 7 world-scale points month-on-month and traded an average of world-scale 51. In the Suezmax segment, we saw the start of the seasonal fourth quarter rate hike, led by increased demand from refineries in the Northern Hemisphere. Rates from West Africa to the UKC climbed 19 world-scale points month-on-month and reached a TCE roughly of $32,000 per day. Rates on the Black Sea Med route saw a less robust rate increase, but still gained 14 world-scale points month-on-month. Aframaxes in the Caribbean-U.S. Gulf market gained significant strength and climbed 45 world-scale points from September on the back of increased demand and delays. At these levels, earnings reached about $26,000 per day. Cross-Med fixtures nearly doubled from September to October, and rates gained 11 world-scale points month-on-month, or approximately $8,000 per day. Panamax activity in the Caribbean just about doubled month-on-month, but the rate gain wasn't as impressive as its larger counterpart. The Caribbean-U.S. Atlantic Coast benchmark traded an average of world-scale 125, or about $14,000 per day. Japan's appetite for naphtha soared nearly 65% month-on-month, but LR2 and LR1 rates both lost some traction as supply clearly outweighed demand. Rates on the LR2 AG Japan benchmark traded an average of world-scale 111, or $22,000 per day, while LR1s in the same route averaged world-scale 121, or $17,600 per day. In the MR segment, a more balanced supply-demand situation in the UKC helped to support rates, which climbed to an average of world-scale 132, up 22 world-scale points month-on-month. A lot of rate volatility was seen on the U.S. Gulf UKC benchmark, and rates averaged world-scale 85, or about $3,000 per day. Looking ahead, VLCC rates are expected to continue strengthening through the end of the year. Some tonnage from the Arabian Gulf will remain employed on voyages to the U.S. West Coast, as end users in that region lack the infrastructure to take full advantage of Canadian and U.S. flows. Suezmax rates are also expected to remain strong through the end of the year as refinery throughputs increase. MRs will likely find support from the potential of robust exports from the U.S. as refinery utilization increases. This wraps up our October monthly tanker update. I'm Matt Renov, and thanks for watching McQuilling TV.